good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi. And for now, the closing trades do not look very happy for the bulls, at least, because we're at the lowest point of the trading session as far as the Nifty is concerned. Well below the mark of 19,700 as far as the index goes. And it's a bank Nifty which is also putting a lot of pressure on the markets right now. That index is dragging down by as much as 400 points. So a lot of pressure actually coming in from the bank Nifty. And that's the key underperformer in the trading session today. What's really standing tall is, of course, the entire pharma sector. That one is doing quite all right. Whether it's a Cipla or a Dr. Reddy or a Syngene, which is all the result reaction, you are seeing that all of those stocks are firmly in the green today. So pharma definitely the pack which is doing quite well in the trading session. What else is buzzing? Let's take a look at that as well, because in terms of the other details, we'll get the other sectoral trends as well, because it's autos which is dragging quite a bit today. M&M, of course, has seen a massive slide, almost 10-15,000 crore eroded worth of market cap over the last couple of trading sessions. Today, that stock is down 7%, so the auto index has been dragged lower by that. Having said that, as we were pointing out, it's pharma which is doing all right, and then a lot of result reactions today. So whether it's a Birla Soft or a Westlife, REC, Godfrey Phillips, all of these have managed to report good set of earnings in the last few minutes. So we're watching out for all of those, and then earnings coming in from IEX and Dr. Lal as well. IEX looks on the weaker side prima facie, but Dr. Lal holding up in the green.
Yeah, but the one taking the pounding and, rubbing off on the rest of the auto pack is definitely M&M. That stake buy into RBL definitely hasn't gone very well with the street. And, I think the street is pondering more about why such a capital conscious conglomerate like Mahindra and Mahindra would actually venture into buying a stake into a bank. To think of it, it's not a small one, right? It's almost in excess of 3.5%. So that is what the street is a little worried about. And the fact that they've categorically mentioned that they are open to upping this stake further. If they really had to buy a stake into RBL, then why not in the financial services arm, and why in M&M? So that is what has the street a little puzzling. We're all awaiting to hear from what the M&M management's rationale behind this is. Maybe on the sidelines of the earnings, we're going to get more clarity. But for now, both RBL and M&M are the ones which are really getting slammed in the session. M&M at session lows pretty much 5.5% lower, if not more than that. That said, like, Anisha was just highlighting, it's the pharma sector which is really taking the limelight today. Early trends emerging, the India business near double digit. That is what we've picked up both from DRL as well as Cipla's commentary. In fact, for Cipla, the numbers are even better than what they did in the previous quarter. And that's something that the street is liking. Positive US commentary, the fact that they're both saying that the sales are going to sustain and even rise further. That's what the street is really liking. In fact, before we move forward, considering it is pharmaceuticals, which is really stealing the limelight today. When was the last time you saw an intraday move of 10% on Cipla? Let's hear out from both these managements.
I think the supply-demand side of the equation is readjusting or rebalancing, as a result of which the pricing pressure has moderated a bit. Going forward, I think, over the real impact of this moderation will probably be felt more in the next 6 to 9 months.
The Asian price situation is primarily of how much competition comes to your portfolio at a given time, and what is the price that companies are offering. This specific quarter, we saw a moderation of that, unrelated to the drug shortages. So we have a very positive outlook. We believe that we'll continue to perform in the same manner. This year we have lenalidomide, we have a main asset acquisitions, we have a growth and market share gain on base business, and we do have 30 launches. So launches are still important lever for us, and all of these components will grow us in the US this year.
Okay, so since we're on the discussion of pharma, why not get a view from Sandip Sabharwal as well as to what he's making of the earnings that we have seen. Sandip, the last time we saw Cipla higher in double digits was back in 2020. So a massive move coming in. Do you think it's warranted?
Yeah, it's warranted simply because of the fact that the expectations were low and the company delivered very strong numbers. And the sector is relatively underowned at this stage. So among institutional investors, the holding of pharma stocks, most of the large funds don't hold any pharma stock in the top 10 holding, etc. So while IT, financials are reasonably owned. Many of the other sectors are not. So I think wherever we see positive surprises, such moves will happen.
For those who've missed out on the rally in the pharma sector, I mean, be it a DRL, be it, Cipla or even Sun Pharma, which you closely track, can they still get in?
So I think when stocks move up in a straight line, I think jumping in at that time creates a situation where you could lose out in the short term. So that's always likely. But from a directional point of view, I think next couple of years should be better for pharma companies as the pricing outlook keeps on improving after years of price pressures. And these companies have also a situation where input price cost pressures are also moderating because as many of the inputs, APIs, chemicals, etc., are moderating. So many of these companies will also benefit because of that. So I think generic companies or those with a good specialty kind of portfolio, etc. So they should do well, I think, next 2 years.
Sandeep, what about M&M? Do you think this decline is giving the ones who have missed out a buying opportunity, or you are also puzzled about the capital allocation decision coming in with the investment in RBL Bank?
See, I think from for the size of M&M, the amount is involved is not as much as the concerns in the market reflect. But then it so I think then it creates doubts in the minds of investors. What are they going to do in the future? And there's no reason actually why they have done it, or they're anticipating some policy changes where they think that they might enter into banking as a group, and that's why they are taking this. So we don't know the internal thinking, but I think the reaction of the market has been disproportionate. So I think more or less what had to happen has happened. So if now results are decent, we could again see the stock do well.
Is that what the chart reading is? You think we could see a bounce from 1450 thereabouts in M&M?
Well, I would believe that I think it's better to wait out for the prices to settle into a trading range, because after that first, I think if I'm not wrong, the first 10-15 minutes the stock was down some 4.5%. There was a mild recovery, but then that recovery got sold into. So I think that's generally not considered to be a good sign, because if the stock tends to form a bottom in the first half an hour, first 1 hour, and then it sees a reasonable bounce back, we expect that the major part of the initial selling is behind us. But if the selling tends to accelerate for the stock throughout the trading session, then we expect that the trend would probably begin its course on the downside. So I'll wait out for a confirmation for M&M, whether the stock gets into any kind of a mild recovery. We'll have to wait out for those signals. As of now, looks like that the intraday selling pressure as well as the selling pressure seems to be intensifying for the stock. I would expect, frankly, the stock to head towards 1400 or even below those levels pretty soon.
Yeah, and the selling pressure is intensifying for the whole market. Just pull up the candlestick chart of the Nifty if we can, because in the last few minutes there's a further downside that we are seeing, and in fact now we are threatening to go below 19,600. Let's pull up the Nifty charts if we can, because that will tell you that in the last few minutes the pressure has actually intensified at the Nifty level, and now even 600 is getting threatened. Of course, it's M&M which has been down 6%. Tech Mahindra has been on the back foot, but it's Reliance as well which is not participating today. So after that run up that we saw yesterday, it's cooling down materially, because there's a cut of 1.5% on Reliance as well. And then banking stocks, they are not helping at all the case today. There's only, I think, one banking stock which is holding up in the green, because whether it's an IDFC First Bank, Axis Bank, Kotak Bank, they're all trading with a bit of a red tinge, and all of that is putting a lot of pressure on the market right now. Nooresh, your view on the market, do you think this move is purely related to the monthly options expiry? Because when I'm looking at the global data as well, there's nothing to get worried about. Europe has opened firmly in the green. Actually, it's up 0.5% to 1%. The pre-market rate on Nasdaq is actually suggesting an uptick of 1% on the Nasdaq. So we are falling in isolation because the Asian markets too are comfortably in the green. What explains that, Nooresh?
So if we look at it, even the advance and declines is almost flat for the day. The mid cap and the small cap indices are flat. On a day when the Nifty is down 150 points, you would expect some bit of a reaction across the board also. So what is being seen is there is some bit of heavyweights taking a knock, and whatever stocks which are doing well are very small weights. So it looks like an expiry move wherein we are seeing some pressure given the last day of expiry, but the view remains the same. 19,500, 600 is a band where you should be actually looking for a dip buying. We've come very close to it, so a 100-pointer stop loss and a buy here looks a good trade on the Nifty.
That on the index, oil and gas weighing heavy thanks to Reliance. Pharmaceuticals really saving the day, but that's not quite the case with the rest of the market. Look at ICICI Bank, completely flattened out, and this after a positive start on the stock earlier today. SBI as well, not doing a whole lot. Maruti, Bajaj Finance, Bajaj Finserv, both those stocks are down as we speak right now. And then, of course, there is the pressure coming in from Nestle, from a Britannia as well, from an ITC, Axis Bank, all of these which have just recently come out with their numbers. In fact, Sandip, I wanted to understand, what is it that you made of Nestle's commentary? The fact that the volume growth has managed to fall short of what the street was, penciling in a range of 7 to 8%, 4% is what they've delivered. Well, the operational numbers may be in line.
Yes, I think low volume growth picture became clear when HUL results came out, and it was clearly reflected that the market has been slow on the consumer side due to the high inflation. And Nestle also has products where the inflation, input inflation has been very high and remains. So I think unlike many of the other categories on the consumer side where inflation is moderated, milk and milk-based products, it has not. And even cocoa prices are at all-time highs globally. So I think we could see some concerns out there. Valuations are not really cheap. Many of the companies are indicating a pickup in volume. In June, July, they are saying is better than earlier months, but then we need to see once the results come out. I would think that as inflation moderates, consumer demand will revive, and that could happen going towards the end of 2023.
That's a take coming in on the FMCG counters, but for the markets, it's quite a bit of pressure that's developing at the moment. We are 200 points off the highest point of the trading session for Nifty. The Bank Nifty has stumbled more than 700 points from the highest point. So there has been a one-way slide. We opened up in the green, but since then, it's just been a linear downward move that we are witnessing. We'll track all of that when we come back from this very short break.
Back with closing trades right here on ET now. We've even slipped that 19,600 mark, perhaps. No, not quite. Not on the Nifty yet, but on the futures, yes. We're seeing a vicious cut of about almost 155 odd points. While M&M, of course, is that key pressure point today. There's HPCL as well, which is down 4.25%. M&M Finance is taking a whack of about 4%. Idea after that bizarre of a 10% move that the stock had yesterday. That stock has fallen 4% today. Canfin Homes, this has really seen relentless pressure, even though the management clarified on that 38.5 crore rupee fraud. But no, it's seen incessant selling on a consecutive basis, 3.6% lower for Canfin Homes as well as we speak. Tata Consumer, Nestle, ITC, and yes, banks as a chunk, starting off with Axis, which came out with its numbers yesterday. HDFC Bank, Kotak Bank, they're all down as we speak. And even, like I said, ICICI Bank, SBI as well, have all of them given up their gains. Kunal, just expiry day pressure, you think? By tomorrow, should it be okay?
Well, I started to believe actually that it's expiry related pressure, but then the data on the charts are actually showing something else. In fact, for the first time in the last 4 months on the line chart so far, so maybe if the next 45 minutes we see some recovery, the line charts could change a bit. But then I think so far at 19,650, 660 levels on the spot Nifty, we could be at the cusp of making a pattern of lower highs and lower lows. This is the first time on closing basis on the daily charts which we could be doing that. We've not done that pattern in the last 3 or 4 months of this recovery from the March lows when the Nifty was sub 17,000. So generally these are first signals that the markets are getting into a tiring phase or into a zone where there could be a lot of pressure in terms of selling at higher levels for the indices. And I think at this point of time, lightening your portfolios could actually be a better bet, provided the confirmation happens below 19,650 today.
Okay, lightening your position might not be a best strategy. In the meantime, pull up the intraday chart of Westlife Development. When the numbers first came in, we saw a bit of a spike on Westlife Development because the numbers were looking all right. And then we got the SSSG number, which was 7%, looked healthy to me, but seems like the street had higher hopes because the stock has completely sold out now. It's sitting with a gain of just around 1% thereabouts. In other stocks, it's the power sector in terms which keeps on rising. We have REC today, which is reacting to earnings and the good commentary come by, while IEX is on the back foot. Sandeep, not sure if you track these power names, but if you had to take a bet, which vertical would you look at? Transmission, generation, renewable, financiers?
See, power finances are similar to any financier, so there's nothing different in them. So essentially, there's no story there per se. They are PSU lenders. Where we have typically played and where we also have exposure is the transmission companies, both Kalpataru and KEC, which we continue to hold. I believe the growth as well as margin picture for them has improved. Although the stocks have also run up substantially, so I think both are at all-time highs. So to that extent, I think for newer investors, they need to time their entries, but we are staying put in this segment. Production side, I don't play so much because I believe that there has on the production side, you always get into issues related to receivables, etc. And as you run to the election year, we could see more delays in payments, and there are a lot of other things which come up, which becomes difficult to predict profitability on the power producers side.
Okay, point taken. The other one which is doing quite well in the trading session, of course, is Colgate. That's high by around 7%. And then Godfrey Phillips to a result reaction coming in. Nooresh, your view on the charts of Godfrey Phillips and Colgate? Nooresh, you'll have to unmute yourself.
Godfrey Phillips looks interesting. The stock has gone through a good enough consolidation after that last rally. The last time the stock broke out from 1200 levels, it went to 2150 and then consolidated, slowly drifted towards 1650. And now finally it has broken out. Now, ideally in this case, it should again cross about 2100, 2150. That would be the view. So going forward, dips closer to 1780 to 1800 would be a zone where you want to buy. So any dips here would be interesting to look at it with a short to medium term position as well.
We'll shortly get Vinny also to talk to us about Colgate, because of course one of the big factors for the company was that they have been losing market share, and that's why the market was losing faith in the company. But now there seems to be a bit of a bounce back, at least in terms of volumes that we have seen from Colgate, and whether that is something that could be taken at this price volume or not is something that we are watching out for. The rural economy is also expected to show green shoots, given that the monsoon has been doing all right. So after many quarters of decline to a slow growth coming in, finally, the volumes perked up by 7% for Colgate, and that was the big factor, and that's the reason we saw the revenue jumping up by 11% in this quarter. Of course, there's this premiumization which is working out as well. The company has been doing a lot of launches to tap into the different verticals. So Colgate is seeing a bit of a bounce back as well. Sandeep, do you track this one, Colgate?
Not very closely, but I think the reaction is because of the results. They were way above expectations, but I haven't tracked it closely for a long time.
Okay, so that's the take coming in as far as Colgate is concerned. But other than that, I think it's Pharma which is seeing the maximum amount of traction today. Cipla, Dr. Reddy's, Aurobindo Pharma, Gland Pharma, Polymed, Syngene, the list really goes on. But you know what, Sandeep, what I'm surprised about today is the reaction coming in on Tech Mahindra. Very, very bleak set of numbers, nothing to write home about. There was no silver lining, whether you look at the deal wins or the revenue or the margins. But the stock is holding up okay. And then the other one, Birlasoft, which has reported a very strong set of numbers. That's high by 5%. How are you viewing, IT? Because a lot of people are now banking that this is the worst and perhaps this is the best time to buy.
So it might not be the worst yet, and I think the project ramp down still continue, and to that extent, companies which are facing issues will continue to do that. There are a set of mid-tier companies which have been doing things which are different and as such growing against the market, which include companies like KPIT, etc. So I think their traction might continue. IT is always a space which is found a huge amount of interest from retail, HNI, as well as funds. So all three categories of investors are continuously looking to buy stocks in the technology sector because of the fact They don't have debt on the balance sheet. They pay out good dividends, buybacks keep on happening, etc. So wherever performance comes, I think that might sustain. But overall, for the sector as a whole, the situation is not very good at this stage.
Labs numbers, if we can just quickly pull that up for you on your screens, because it seems like there is some very big one-off, but I don't really know. We'll have to dig deeper into the details. While the revenues, of course, are lower by 23%, it's the PAT figure which is quite off. Anisha, is there a one-off there?
No, none of the one-offs that I can see. I think it's the fact that the revenue has come off by 400 crores on a year-on-year basis, and the complete operational leverage which was there on account of that has gone away, and that's why the profitability is lower, because actually the taxation is also lower in terms of expenses. I don't see a jump up in a very big way in any case. Even the other income is pretty much at similar level. So I think it's a pure operational miss coming in from Laurus at this point of time. Weak top line, and that's flowing into the bottom line and the margins as well.
Yeah, 167 crore rupees on the EBITDA versus a comparable of 454. The PAT is down 90%. It's only come in at 25 crore rupees thereabouts, whereas it was a comparable triple-digit figure, which we will just get up for you on your screens. It's a nosedive that Laurus Labs is seeing. But Kunal, just getting back to IT, you were earlier making a case in point that perhaps IT is coming into the buy zone. Maybe the worst is getting priced into the stock prices. What happens now after Infy's numbers and the incessant weakness that we've seen from mostly all companies after?
So yes, the weakness is there for the IT stocks, but then there is no incremental selling pressure. So, for example, the previous quarter when Infosys made a low, I think if I'm not wrong, the low was around 1200 or 1220 odd mark. This time around, after such a kind of a news flow event for Infosys, the stock has been unable to break below the 1300 level, which means that with every incremental news flow being negative, the stock is actually not making a fresh swing low, and that's the first important sign of resilience which we look out for when stock prices go through a patch of extreme news flow, but the prices, they stop reacting in a very similar kind of a behavior. So that, I believe, is the first sign that there is some resilience which is coming into the stock price. Now, ideally for traders, they can look out for two kind of strategies. One is that they start buying at current levels in the hope and expectation that maybe the stock may not come back to that 1200 levels, or else wait out for a point where the stock comes, say, closer to 1250 odd mark, which could be a midpoint of the support for Infosys. I think either of which ways, it indicates that the worst could probably be behind into the stock price. There may be a bit of a drag, there may be a bit of on and off correction to the stock price, but then that 1200 mark, till the time that's not broken for Infosys, I would believe that the stock can go into a strong recovery, say in the next 6 months to 1 year. So it's more positional time frame which is required, but 1250 is an important support for Infosys.
Okay, so that's a take coming in on Infosys, but back to Colgate because that stock is holding up all right, and Vinny is joining us with the internals on that one. Vinny?
Absolutely, it is interesting to see why the stock is holding up as well, and will this actually continue is something that we're watching out for, because now the growth initiatives of some of them have actually started showing a positive side coming in. They had taken these initiatives long back in terms of launches, premiumization. They were focusing on that. Now early signs are visible in terms of these innovations they have taken, in terms of the launches they've done, the relaunches they've made. Early signs are visible on that front. Rural, that was also, they said that the rural demand is starting to see some green shoots as well as urban demand has remained positive as well. They're seeing a good response in terms of new innovation and renovations as well, which they are highlighting, as well as the RM price that has remained stable. So that could furthermore show a sign that in terms of gross margins, we could see a further improvement going forward also. Q1 was already good. Now going forward, maybe if this RM cost remains at this level, that would be a positive sign that could come in for Colgate as well. And analysts are saying that some of this volume shares that we're seeing this time, strong volume growth is what we saw from Colgate. That could maybe be mainly driven by good execution that they saw in the Q1 as well. Let's not forget, this time around the toothpaste volume came in at around 7%, which is at an 8-quarter high. And finally, after 5 almost quarters of decline, we're seeing a positive volume growth coming in from Colgate. Also in terms of revenue growth, that double-digit revenue growth, after 8 quarters, we've finally seen a double-digit revenue growth coming in from Colgate. So maybe a turnaround, is it what is something that one could watch out for? Because yes, there are some concerns in terms of the competitive intensity, which could lead to a market share loss for the company. That number is still not there. And obviously in the past, in terms of the performance, that has remained lackluster, because even after the launches and even after premiumization and that focus that they had, that was a bit of a lackluster. So that still remains a concern, and that is something that we have to watch out for in terms of these efforts they've made Is it only a one-quarter thing, or will it continue to grow going forward as well? Is something that we will watch out for in terms of whether it's going to be smiling or whether a cavity is going to be spoiling the Colgate's run-up is something to watch out for.
Get your eyes off from Loris Labs. Vinny, thanks for highlighting Colgate's performance. Loris is taking a nosedive right now and actually now seeing a little bit of a recovery as well, taking its time to really settle down. Let me quickly take it across to Srishti and find out, Srishti, what went wrong in the numbers, because we're struggling to find if there is any one-off. Was the street really expecting such weak numbers?
Absolutely no. The street was expecting better numbers from Loris Lab, and especially from the likes of Cipla and Dr. Reddy's. The expectations from the pharma majors were definitely on the higher front, but Loris Lab, what a disappointing set this time around. Look at the fall in the profit, which is now down 90% on a YY basis. And the margin specifically, the street was expecting, or rather penciling in, a margins close to 20-odd%, and the margins have come in at 14.1%. Other than that, if I look at the numbers, then the revenue has also seen a degrowth of 23%, as well as the EBITDA has seen a decline of 63% on a YY basis. If we look at the performance, then the company do mention that the CDMO synthesis revenue has declined comparison given the large PO executed last year. Otherwise, the baseline business tracking is healthy and the project pipeline continues to scale up. But for the API business, that has also seen a decline of 16%. The temporary impact in the other API, the oncology, is down, and they expect a rebound in Q2, so that's a bit of a positive commentary. From the formulations business, where they say that the underlying demand is healthy though, but Q1 was reported weak, wherein they have seen a decline of 27%, mainly impacted by the lower offtake in their RV business by global generics, because the street estimates were that the ARV business rather should now pick up some steam, and this performance should get better. But across the segments, we are seeing a weak set coming in from Loris Labs, and that's what reflecting in the stock price as well.
Surprisingly, Shrishti, the stock has completely reversed its losses and it's in the green. And I think the key critical statement is the fact that despite the weakness in Q1, they are saying they're on track to achieve the guidance that they had given out for FY24. They're on track to spending the capex plan that they had articulated. They are saying FY24 holds good potential with higher volumes of existing products driving Europe revenues and new approvals coming in from North America as well. So the commentary is something which the street probably is banking on, because the stock has recovered, even though this time the numbers are much lower than what street was expecting, as Shrishti also pointed out. It's the commentary which perhaps is keeping that stock afloat. But let's get some of the closing strategies from our chartists as well. Kunal, you go first. What's the closing trade?
So there'll be a sell on Ashok Leyland. My sense is that the stock has hit some sort of a plateau in terms of resistance closer to 180 to 85 territory. So that's a stock which I would look to sell.
What about you, Nooresh?
Looking at Bank of Baroda, DCB Bank, which looks interesting. That's the one which is trying to give a short-term breakout. A range breakout here could surprise on the upside, and smaller banks have started taking trend, so this could be the next one on radar.
Loris Labs finally settling in quiet, very swiftly recovered all of its losses, and that sharp, downtick that you saw in the stock. I don't know if you can bring up the tick-by-tick chart for Loris Labs. That will give you a better picture of the kind of recovery, and preceding to that, the drop that the stock saw. I think the market is liking that they're going to manage to retain their FY24 revenue guidance. On that note, we'll take a very quick break, come right back. We'll track the last half an hour of expiry day.